Hi, this is Stephen Leeb coming to you from leebinvestor.com. This past week or so has really been kind of troubling for investors. But basically, in the scheme of things, it's normal. Markets don't go straight up, but markets do not, and this is the critical point to remember, markets do not have major corrections of, let's say, 15 or 20% without a very well-defined catalyst. And today we really just don't have a catalyst. There are troubles in the Ukraine, there are troubles in the Middle East, there are lots of geopolitical problems that we can, focus on. But none of these problems have led to the kinds of economic events that would lead us to suspect that the current downtrend or the current reaction, we can't even call it a correction at this point, but the current reaction in the market is anything more than just a normal shift in market leadership. And that's what's really important. There has been a shift in market leadership. We've really gone from those high PE stocks back to lower PE stocks that are characteristic of industrial America, characteristic of an industrial world. The stocks that have been leading, if you want to say leading, in the sense that they haven't gone down as much during the market correction, have been exactly those kinds of stocks, the Deeres, the Caterpillars of the world. Gold has had a fairly good, it's been a decent week for gold. And it's been a decent week for most other commodities as well. The stocks that have really been clobbered are those high PE stocks. Now, what we suspect is the catalyst for this kind of change, and this kind of change always does lead to some sort of reaction in the market. The catalyst has been Europe. Europe has made it very, very clear that they will do what's necessary to stimulate their economies. They are even considering, and even the Germans are considering, quantitative easing. We think that was a catalyst that set up this reaction, that set up this change in market leadership. And we suspect this change will persist, that when the market rights itself in the next few days, we hope, it will be the industrial stocks, the commodity stocks that lead the way. Our indicators still have a negative tone to them, so we're not ready to say jump in whole hog right now. But stay tuned because there will be a superb buying opportunity. And in the meantime, don't panic. If you've basically been buying the kinds of stocks we've been recommending, on balance, you're down, but you haven't been really, normal kind of reaction. Some of the stocks we've recommended, however, some of the biotechs have really been clobbered. We don't expect them even to stay down for the count. They may have gotten a little bit ahead of themselves in the market, and they certainly have come back some normal kind of correction. But on the other hand, we don't really expect these stocks, these high multiple biotech stocks, etc., to be the market leaders on the way back up. We expect that baton to be passed again to the industrial stocks, energy stocks, commodity stocks, even gold and silver. Stay tuned for when we think there's a superb buying opportunity. It will probably come within the next few days. Thank you very much and have a peaceful weekend, okay? Things will be fine.